Wall Street will adapt, right? They're not going to hold on to a loser. If Bitcoin starts really outperforming, they'll embrace Bitcoin. Now that they have an opportunity to buy Bitcoin, it's just another ETF now, right? So, I think Wall Street is nothing but efficient, right? That's what it is, right? It's super, super efficient. And if Bitcoin starts going on a rampage, people are going to jump on board the train. That's really the way it will work. And they haven't had an opportunity to do this up until now, right? That's the key point. It doesn't mean that they will, right? It's not like there's this flood of money that's just, dying to get into Bitcoin, right? Because as I said, the money's pretty happy right now in U.S. large cap stocks and FANGs, right? Very happy. And you can even make the case that bonds are going to do pretty well over the next, year if the Fed actually cuts interest rates. You could have a boom in bonds. So the 60-40 portfolio is in pretty good shape right here, right? So they're not sitting there going, we need Bitcoin. No. But if Bitcoin starts kind of outperforming, if it's that kind of, as Eric from Bloomberg said, is the hot stuff, right? Then people are going to be like, okay, I need a little bit of that stuff in my portfolio, right? I don't want to go completely crazy. I don't necessarily want to go 20% Bitcoin, right? But, I might go and add 1 to 2 to 3 to 5% of Bitcoin. In the same way that somebody said I might add 1 to 2 to 3 to 5% of ARK, which owns Bitcoin, Tesla, and all these other things, right?
Yep.
So that's kind of the way I see, realistically, that's what we can expect out of Wall Street. But that's an enormous amount, right? If we can get the average stock market trader, portfolio to be like, yeah, you kind of need to get 1% of Bitcoin, we're done. That's all we need.
Wall Street will come for Bitcoin like a tsunami as it starts outperforming all other assets. And once that happens, there's no stopping Bitcoin from smashing into the six-figure range. That's the latest message out from Bitcoin investor Fred Krueger. For those who don't know Fred Krueger, he worked on Wall Street during the early 80s to the late 90s. He holds a PhD in math from Stanford and boasts 10 successful entrepreneurial exits from companies he created. Safe to say, not only is Fred a total G, he also knows what he's talking about. Recently, he spoke about why the Bitcoin ETF is an absolute game changer and whether Bitcoin could potentially replace the S&P 500. However, make sure to stick around to the end of the video where Fred reveals why you should never sell your Bitcoin. Also guys, if you want to stay most up to date on the crypto world, I send out a daily 5-minute crypto newsletter that covers expert predictions, on-chain data breakdowns, and breaking news all for free. Click the first link in the description, enter your email, and join over 40,000 others to become a better crypto investor right now. Now here's Fred Krueger with why he thinks Bitcoin is an unstoppable asset.
I have a kind of a unique background from a Bitcoiner's perspective, right? Because a lot of the people on your show are very well versed in kind of the history of Bitcoin and so on. They're not going to be so well versed in kind of the history of Wall Street and securitization and so on, right? So I kind of come from both worlds. And I think that about a month and a half ago, I realized, first of all, I thought that the ETF, if it happens, if Gary Gensler would approve it, would be an absolute game changer. And second thing I realized is, oh my God, nobody in the Bitcoin world has any idea of what this means. So I started posting videos on kind of what I really thought it meant. And I also believe, by the way, that all my friends on Wall Street also don't really understand the extent of what Bitcoin means or why it's any different from any other ETF, right? So I think that, my view is I can add something to the discussion by kind of bridging both of these worlds, right? That's why I think I have a somewhat unique experience to bring to the table. The ETFs as an instrument had about $300 billion in 20 years ago in 2004, right? It was about a $300 billion kind of asset class. Well, right now it's about a $10 trillion asset class.
Unreal.
So it's not just that, this is just a large amount and it's always been a large amount. No. This is a large amount growing very, very, very rapidly, right? And it's growing. In 2021, ETFs alone grew by $1 trillion. So there was $1 trillion of inflows into ETFs, right?
So over 10% growth year over year that year.
Let's see. Yeah, that year it was, and it was the year of COVID, right? So basically, and that's really kind of when Wall Street started really paying attention to ETFs, right? And it's still going to grow, right? So the estimates are it's going to go from 10 trillion to 20 trillion in the next, decade, right? Or next 5 years even, you know what I mean? So this is on a huge growth trajectory of its own. And what is it displacing? Well, it's displacing mutual funds, right? Which are, you're paying some manager 1% to do something, right? It's just displacing all kind of funds, whether it's a mutual fund, a closed-end fund, some guy who's recommending stuff, who's managing your money. All these things are getting disrupted by ETFs. Indexing has worked for the United States over the last 20 years, right? There's no doubt. You bought the S&P in 2000, you're up 7 times, okay? Great. And not only you're up 7 times, but you're up on a very, very kind of steady trajectory, up 7. You had this little blip down, which was very painful in the great financial crisis, right? But it was very quick, right? 2009, we kind of recovered quickly, and then it was just straight up, right? So if you contrast that with the graph of Bitcoin, it's a lot cleaner, right? So most kind of TradFi investors are like, why do I need Bitcoin? Right? I mean, my portfolio just goes up like this, straight line. That's their experience, especially over the last 10 years, right? That's absolutely their experience, just straight line up, right? So on the other hand, if you look at a Japanese investor, for example, it was a straight line up from 1970 to 1990. Then it was a straight line down from 1990 to about 2005. And now it's sort of climbing back, but it's just a horrible experience, right?
Yeah.
So indexing in general doesn't work. It's indexing to the right asset in the right time works. And I think basically, the US stock market, that was the right asset in the right time for the last 2 decades. No doubt, right? It doesn't mean that it's going to be the right asset for the next 2 decades, right? I definitely think Bitcoin is going to be a much better asset to hold than large cap US stocks over the next 10 years. I think, most of these ETFs, even though ETFs do trade, and, actually they're trading quite a bit, right? The volume of these ETFs is remarkable, right? It's remarkable. It's like 10% of Bitcoin's entire volume right now is on these ETFs, right? So Bitcoin's trading, $20 billion a day, it's $20 and $2 billion a day is trading on these ETFs. So it's already approaching 10% of the exchange volume of Bitcoin, which just tells you something, right? Because these guys have not even gotten going yet, right? But I will say that I do think a lot of this stuff is going to be placed into portfolios that are rebalanced, once a month, maybe. And they're rebalanced according to formulas. Like, I'm going to put 2% of my net worth in Bitcoin. Okay, Bitcoin goes up, I'm going to sell a tiny bit, and I'm going to stay at 2%. Bitcoin goes down, I'm going to rebalance, I'm going to add a little bit more so I can get to 2%, right? That's a sort of typical asset allocator model for how to approach something like Bitcoin, right? And they're not going to be looking at the daily RSI chart, or any of these other, some channel or whatever technical analysis you're looking at. They're just not even going to look at that, right? So I definitely think that that's kind of where I think most of the money is going to be parked. It's going to be parked in an asset allocation thing, which is like super, super bullish, right? Because degens are always talking about their diamond hands, but, with the diamond hands, there comes the total, 100x perpetual traders, right? So, and even the diamond hands, a lot of them completely panic because they have too much ownership, right? Like, that's the problem with Bitcoiners. The problem with Bitcoiners, you talk to the average Bitcoiners, they own no other asset other than Bitcoin, right? So they're like, yeah, I'm all in. Well, I'd say if you're completely all in, you're vulnerable, right? Because what's going to happen is Bitcoin's going to go down 50%, and all of a sudden you need to pay the rent, you just had a car accident, you need to buy a new car, something, right? You're going to be a forced seller, right? Now, if you own 3 or 5% of your portfolios in Bitcoin and it goes down 50%, what do you care? It's like, great, you're down 0.5%, on your overall portfolio. It won't matter. So I think the average portfolio, the average sort of high net worth portfolio is pretty diversified. Yeah, they've got a lot of exposure to the US stock market, but if they get involved in Bitcoin, it's not going to sink or swim, kill them if it goes down. I feel like Bitcoin, it's really a discovery in that sense. It's sort of the canonical form of what, this thing must look like. And, Adam Back said this video, which resonated with me a lot. He said, he goes, I'm pretty technical. And when I saw Bitcoin, I sort of spent 2 months trying to fix it and make it improve it and make a better version. And he goes, and then I realized you actually couldn't make a better version, And so it really is, that's the discovery. You could change a few things here or there. You could say it's not 21 million coins. You could change the halvening to every year or every 6 months. It doesn't matter, right? There's lots of different ways you can do it. But the fundamental form of what that is like, that's the way you solve money. And that was solved in 2008. And we're just coming to grips with what that means as a species, that we figured out a way to have this money that does not depend on any committee. It doesn't depend on any trusted third party. It doesn't depend on Satoshi or anybody else, right? And everything else, all these other things, they're a little bit like committee. They all kind of have Vitalik or somebody, some human, and that human is kind of like spearheading the direction. And I think, Bitcoin is, there's some tweaks that could be done to make it better. Not opposed to them, but the fundamental algorithm hasn't changed one iota since it was laid down in that white paper. 30 years old, you're an idiot, that's all I can say. If you're 30 years old and you're selling your Bitcoin and you're trading it, you deserve to be poor. You're given this huge opportunity, and yet you sell it. Sorry, I have no pity on you. You know what I mean? Zero. I definitely think that holding throughout the entire 2021 cycle, the 2020 cycle, was the right move. Entire cycle I held, right? And I think it was the right move. I don't think I should have sold at 67,000. I don't. I think that was not the right move, tax-wise and everything else. It wasn't the right move. And you have to learn, I would say, try to learn to not. And I got to tell you, one of the things that really kills me about people your age is a lot of them are like, well, Fred, you boomers had such a good time with houses, right? You buy your house, you buy your dad or, the average person. You guys bought these houses in the 70s for like 10 grand or 20 grand, like they're so expensive now. But yet you've got this other asset that's going to do far better than housing, Bitcoin.
Way better.
And you're not applying that same logic with Bitcoin.
And you can buy $1 of it. You don't have to have a down payment for Bitcoin.
Yeah, and you don't have to go house shopping, find the perfect house. You just buy Bitcoin. It's fungible, right? So you're sitting in front of the best opportunity. I didn't have Bitcoin, okay, when I was 30 years old. Didn't exist, right? So you've got this perfect instrument, this perfect investment, and yet you guys are bitching about house prices.
So there you have it. Fred Krueger's take on Bitcoin is pretty clear. He thinks Wall Street is already getting on board as Bitcoin becomes the big shot amongst assets. Fred's views about the Bitcoin ETF being a game changer and the possibility of Bitcoin muscling in on the S&P 500 is interesting stuff. And when you look at the rising popularity of the Bitcoin ETFs, plus the idea of Bitcoin becoming a global go-to asset, you can't help but think he might be onto something. As we wrap up, Fred Krueger's insights give us a roadmap through the twists and turns of the volatile crypto landscape. But before we go, a quick reminder for those who are keen on staying updated in the fast-paced world of crypto and Bitcoin, consider subscribing to our daily 5-minute crypto newsletter. It's a concise resource for the latest expert predictions, breaking news, and top on-chain analysis trusted by over 40,000 subscribers for insightful crypto investment information. Click the first link in the description to join our community and elevate your crypto investment knowledge today. Anyway guys, hope you all enjoyed today's video and that provided you with some value. I'll see you all in the next one, and as always, all the best.